Well, in Q1 FY22, tractor manufacturing company Escorts number actually beat the street estimates. The numbers were above the estimates of ET Now poll, and before I tell you, that's just one point to highlight that in Q1, we see that due to the second COVID wave that has been impacting the sales of all the auto segments, tractor sales were the least impacted, and that was purely because of a strong rural agri demand. And that's visible on the results of the company this time as well. Firstly, if we see the revenues, the numbers were posted at 1671 crores versus our expectation of 1614 crores, while the EBITDA was marginally above our expectation at 233 crores, but the margins, if you see, then they were actually 80 basis point above our expectation at 13.9%. That's a jump from 11.2% of margins that were reported last year, but this time if we see on a quarterly comparison also, that's from 15.6% that was reported in Q4 FY21. This time the margins have actually reduced. That is purely because of the price hike taken by the company, because in order to offset the impact of commodity inflation in the past 9 months, Escorts had actually hiked the prices 3 times of all its offerings. And lastly, in the bottom line, the results were above our expectation. The company reported a profit of 185.2 crores versus our expectation of 164.8 crores. So quite a really good set of numbers. But apart from that, a couple of points I would like to highlight. That in the segmental revenue breakup, you will see a quite really good growth on a YY comparison. But that's purely because of a low base that was of the COVID first wave impacting the numbers over there. But on a quarter-on-quarter basis, there's a decline whether you see their tractor division, their construction equipment division, or their railway division. Firstly, taking up their tractor division, then the sales were down 20.4% on a quarter-on-quarter basis, and also the company has actually lost their domestic market share, because from 12.9% that they were holding in Q4 FY21, that has actually come down to 10.7% this time around. But on the margin front, the performance was not that bad. The EBIT margin in their tractor division was at 15.6%, but that's just 144 basis point decline on a quarter-on-quarter basis, and that's actually up from 14.5% of margins that were reported last year. So quite not that disappointing numbers on the tractor division, but in the construction equipment division, we see that the sales were down 63% on a quarter-on-quarter basis. But going forward, the company is quite hopeful that October 2021 onwards, they will be able to catch up whole of their sales. So that will be something to watch out for. And lastly, their revenue division sales were above 120% on a YOY basis, and they are hopeful of a good recovery over there as well. But overall, the company did mention that this quarter they were negatively impacted by the operating leverage and the volume drop. But all in all, if we see, the company has actually managed to match the street expectations in Q1 FY22 results.